Saturday, August 26, 2017, Monaco 64, home of alternative economics and contrarian views. So we're going to look at the gold market, the US dollar, and the technical and fundamentals behind precious metals and currencies. And I'm going to look back at a video I made on the 8th of July about gold seasonality. That's quite interesting. First of all, I'd like to review here the gold price in all different currencies and how it's doing this year. And I'll start out with the US dollar. So gold, as of yesterday, is up 12.5% year to date. So not a bad return there. Gold in sterling is up 7.86%. That's in spite of the dollar dropping a lot this year. Gold is still protecting people in different parts of the world that use other currencies. Gold in Japanese yen up 5.16%. That's a lot better than negative rates or almost zero rates in JGB 10-year yield. The only currency, major currency I see here that gold is actually down year to date is the euro. So gold is down 0.94% year to date against the euro. And I'm using the spot exchange rate close from Bloomberg. So if you go on Bloomberg.com and you do a search and you put XAU USD, it'll come up the dollar price of gold. If you do XAU EUR, you get the euro price. XAU GBP, you get the sterling price, and so on. So XAU in Swiss francs, which is a lot of times considered a safe haven currency, well, guess what? It's up 5.65% against the Swiss franc. Maybe, UBS and the other big Swiss banks should put their money in gold instead of keeping it with the SNB, the Swiss National Bank, and paying them billions of francs in negative interest rate. So, yesterday, really interesting day. We had Janet Yellen speaking at Jackson Hole. I think that was around 10 a.m. Eastern time, New York time. And prior to that, gold was actually doing fairly well. It traded up from like 1286 up to 1292. And then just before she started speaking, the currencies moved around. The dollar rallied against the yen. And actually gold got clobbered at about 20 bucks. I think we went down to 1274. There's a chart here from Kitco. They've got it down to 1279, but on my system that I look at gold, they had it down to 1274. But look how it just rebounded really sharply, after that drop, and we closed, above 1290. The Bloomberg spot price close for the week was 1291.35. So interesting there. I think, gold is starting to look a lot better technically. Fundamentally, there's an interesting story on kingworldnews.com. And I know Eric King a lot of times can be quite, I think, a clickbaiter a little bit. He's always got shock, and amazing. He uses quite... amazing language, but his website is quite popular and I look at it once in a while, and he has an interview with Andrew Maguire and it says Andrew Maguire remarkable audio interview now released, but take a quick look at this. So he talks about how commercials have increased the short positions in gold, even though they're not near the record positions from last year, but he notices that the commercials are not as bearish on silver. But the other interesting thing he talks about is seasonality and the Bank for International Settlements. And he says, and I quote, however, gold, and GC in brackets, GC is the code for gold futures on COMEX. Gold is in its 15th session above the Bank for International Settlements 1260 resistance level. So Andrew Maguire, he's quite well connected in the bullion market in London, and he seems to well, he says that the BIS and Basel looks at 1260. They wanted to keep it below that level and that we're above that. And he says, and each day evidence is showing that physical support is rising, with the other jaw of the opposite, short squeeze vice, being that Indian buying season is approaching on September 5th. This setup as usual, and as we assessed, given the COT or commitment of traders structure. And then it goes on to say you have to listen to the interview. I haven't listened to it yet, but I made a video actually on the 8th of July, and I'll put it up in the cards above and a link below, and it says gold seasonality and Andrew Maguire. And at that time, he was saying that someone big, physical, was going to buy a lot of tonnage. And I also talked about how someone looked at gold seasonality and that gold goes up mostly, from July 6th, historically, to February 24th or thereabouts. And this was July 8th. And on July 7th, gold, for example, July 10th, gold made a low at 1205.40. The video was made at, on the weekend. So on the Monday there, we dropped to 1205, and that's been the low since, July 10th, and now we're at 1291. I'm not trying to say, oh, I called this or that. I'm just trying to say that, it looks like the seasonality part of gold, the bullish seasonality is working this year again. So that's quite interesting there. And I guess we have to give, Andrew Maguire some credit for his, claim that there's going to be a lot of physical demand for gold. And, so let's look at some of the charts and the technicals. Let's look at this is like a weekly, monthly long-term chart of gold. Going back to 2003, we've got that trend line, that famous trend line from 2011, and you can see that it looks like a pennant, and you can see we're clearly breaking out of that trend line and pennant, so it's looking very good. If we're able to close, around these levels, 1290 or even 1300, it will be the highest monthly close since October 2016, and we will definitely be above that trend line, and it looks like we're breaking out of that pennant, from the long-term bull market in gold. This is like the consolidation. I know it's taken a few years, but that's how markets work. So now I want to look at gold in British pounds, because it's a really interesting technical picture there. I've probably spoken about this before. There's the top in 2011, just below 1200. And we're forming basically a teacup and handle. You can see the top of the cup, that's that trend line. The teacup is basically the chart there. I haven't put lines there, but it looks pretty much like a teacup. And then you've got the handle there. We need to break out of the handle, which is forming like a little like a pennant or triangle. We did close above 1,000 pounds this week, around 1,002. So it's looking pretty good. Also, even in sterling, despite, the dollar being weak, generally speaking. So let's have a look at the dollar index. And the dollar index, I made a video last week saying that all we were seeing was a consolidation of a downward trend. And as you can see, that's kind of worked out so far. Yesterday was a big drop in the dollar index. You can see we were forming that little flag formation there, which is a consolidation, and we've broken through the flag. The key level now, of course, is just below 92. And the only reason why gold hasn't broken out above 1,300 in spite of the drop in the dollar index is because of the Japanese yen. As many of you have watched my videos, I've talked a lot about that relationship of when the dollar goes up against the yen, gold price goes down against the dollar. So the only reason the dollar index didn't drop as much was that the dollar stayed fairly steady against the yen, fairly strong. So, but just like in the dollar index, it looks like we're forming a little consolidation flag here on a downward trend since, you know, after the middle of July, so to speak. It will be interesting, you know, if we see that the dollar drop through the little flag there next week and the consolidation ends, that could be what helps gold finally break above 1300 and stay up there. So what else is there to say about gold and the markets? Well, you know, there's a lot of talk about U.S. Secretary of the Treasury's visit to Fort Knox, Steve Mnuchin, first Treasury Secretary to visit Fort Knox since 1948. And he came out and said all the gold's there, you know, don't worry. And there's a lot of like discussion online in the internet and the alternative financial media. You know, I looked at Silver Doctors, and David Kranzler, the fund manager, is criticizing Jim Rickards, saying Jim Rickards came out to say that there's nothing to worry about, all the gold is there, and that you know, the reason why there isn't an audit and hasn't been one since 1953 is that the U.S. government and the Fed don't want to make gold seem important. And David Kranzler, you know, goes on to say, oh, they've brought out Jim Rickards to make that comment because they don't have any gold. But I have to give Jim Rickards credit. He's written about this, you know, in one of his books recently about gold, the new case for gold, and he talks about that's why he thinks they haven't done an audit. So this is not something recent that Jim Rickards, you know, it wasn't just last week someone called him, hey Jim, do an article and say that the gold is there and that's why we're not doing it. So that's not it. But do I know if the gold is in Fort Knox? Well, first of all, I guess not all the 8,000 tons of U.S. Treasury gold is in Fort Knox. I guess they keep some in West Point Depository, you know, West Point in New York. They don't keep all the gold in, you know, Fort Knox. The question is whether, you know, there's also the question of leasing. The U.S. Treasury might have leased this gold, but when you lease something, you still own it. The leaseholder doesn't own anything. He's just leasing from you. What might happen is that, you know, the people who lease the gold from the Treasury, like JP Morgan, Goldman Sachs, all the bullion banks, they might have sold the gold they leased many times over. And if there is some kind of reset and the U.S. Treasury needs to close out those leases, you can bet JP Morgan is going to have to cover all those naked sales, because some of them are naked. They're just selling gold that they're making up, but they're fairly comfortable because, you know, they don't expect to be called on the leases, or, you know, so so how does the U.S. maybe the U.S. Treasury or the government has had to transport some gold out for those leases, but the U.S. will not run out of gold. All they'll have to do, you know, is through the Fed, they'll just print more money and buy up the gold, and all it will do is drive up the price. So I don't think that is a problem. I think the way people could help, you know, the gold bugs and the gold investment community is through buying physical gold. You know, I know, you know, someone buying an ounce won't make a huge difference, but you have thousands or millions starting to do that, it will. As for the hedge funds and fund managers, a lot of them are not allowed to hold physical, you know, goods. So they have to buy it through, unfortunately, the ETFs. So that's it for now. If you enjoyed this video, please like, share, and subscribe to my channel if you haven't yet. And I'll talk to you later. Bye.